Assalamualaikum and a very good day to everyone. Today I'm going to discuss one of the most important or crucial parts of business plan, which is the financial plan. And this section is the backbone of your proposal because it is shows whether your idea is viable, feasible, and attractive to the investors. For example, like bank, right? Of course, when you want to start up your businesses, you need some funds. The bankers or bank organizations are one of the investors of your business. And by the end of this lecture, you should be able to determine financial plan steps and to prepare a financial plan for a business and also to analyze the financial performance of the business. Right? So, the financial plan is always the last section in a business plan. And you know why? It is because it ties together all the other parts, for example, like marketing, operations, and management into numbers. Investors don't just want the idea of your business, but they also want the proof that those ideas can generate returns to them. Right? Of course, when they invest something, they expecting something in return. Going to the next slide. All right, in a financial plan, we have short and long-term financial requirements in order to start our business, right? For short financial requirements, it is just the durations, around 1 to 3 years, right? For example, like variable assets that we have, when we purchase any equipments, right? For example, like photocopy machines, others are printing machines, and also computers, and also other electrical equipments that we need, right? And then these numbers of electrical equipments that we buy from the suppliers, we need to pay them, right? In 1 to 3 years time or durations, right? For example, like when we purchase any computers, for example, like 20 units of computers, of course the price is very large or in a high amount, right? And of course we need to pay them within a period of time, right? We cannot pay them in a lump sum, just one off payment, because we need some of our money to cover other expenses. So with that, these short financial requirements, we will pay these suppliers within 1 to 3 years period of time. Okay, then for the long-term financial requirements, for example, like if we buy any fixed asset, for example, like transportations, right, that costs around 40k, right, 40,000 ringgit Malaysia, or up until 70,000 ringgit Malaysia, and also another fixed asset, which is land and buildings, right? Of course, it will require us to pay around 10 to 20 years of time. So this kind of financial requirements, we need to plan properly. How are we going to pay them, right? From which funds that we going to get, and also with that money we will pay them accordingly from month to another month, right? And then how requirements are to be financed. This is what I talking about right now, just now, right? Sorry, just now. For example, like finance, right? Internal is whatever we have, right, in our premises, right? For example, like fixed asset just now, right? Land and buildings. What else? Computers, and then also any other current assets, right? How are we going to pay? So maybe we will pay them by using the profits that we earn, right, monthly, right? And then for the external resources, right, for example, like suppliers, right? Suppliers of for the cars, for example, right? Maybe, yeah, for cars, vehicles, or also land and buildings, right? The things that have very um, high costs, right? That can reach up to 20K or 100,000 ringgit Malaysia, for example. So how are we going to finance these assets? Of course, we need to get a loan from the bank, and then this is how we going to pay them. Meaning to say, the bank, right? We will deal with a bank, and then the bank will pay these the landowners or the building developers. And then we will pay the bank back monthly with the interest that being charged, right, by the bank. And then the projection of the financial statements, and then these financial statements need to be recorded properly so that we can manage how we're going to pay them, how are we going to pay these suppliers, the banks, and also other investors in the future, right? And then also financial analysis also need to be done, right, in order to determine viability of the business. So I mean to say, this financial analysis is really crucial and important, right, to help us to detect or to indicate, right, whether our business making a lot of profits or not. Okay, then to the next slide, right? The financial plan important. So this is why the financial is really important. The first one is to determine the investment amount, and then also this financial plan also help us to identify sources of finance and their purpose, and ensure sufficient capital, appraise viability before committing funds, and also provide a guideline for implementations. So meaning to say, in summary, right, financial plan is really important to help us to identify whether our business making profits, and also it can become the guideline for the implementation of the projects that we going to initiate, right? Okay, for example, like when we want to open a restaurant, so where do we get money from the bank, for example, and then how are we going to get the profits, right? For example, like selling the menus itself, dine in, right? Dine in, or maybe we can have another plan, right? Maybe we can use our source of fund for delivery services, right, to from house to house, right, to our customers, right? And maybe the other plan, we can also open up the drive-through sections, right? Of course, this drive-through have their own system. So with that, we also need to purchase the system and also devices that we need, right, in order to run this drive-in, I mean drive-through services. Okay. And where do we get the numbers from, right, to record the financial informations? So of course, we need to take into considerations of all the operational budgets that consist of administrative budget. How much do we need to pay for the payroll of our employees? How much do we need to pay for any equipments that we need, right, in order for us to record the our staff um, attendance, right, clock in, clock out. So everything need to be include under this administrative budget. And we also have marketing budget. Of course, in marketing, we have a lot of techniques and methods that we use in order for us to promote our product. For example, like uh, uh, hard copy brochures. What else? We also have social media. Of course, social media is not really need a lot of costs, right? Because now everything is free right now. We just need to have the electrical gadgets and also internet, for example. But still, this marketing budget is really important because some of the products, right, we need to not only promote it through the social media itself, but also by TV commercials, right, and also like radio, right, on the radio, right. And also last one is the operation budget. So whatever budget that we need in order for us to run the operations, our business operations, right? Like POS systems. What else? We also have these delivery services system, drive-through systems, and then self kiosks, right? I mean self payment kiosks, self order kiosks, and so on. So this operation budget also need to be included under this financial information, which we're going to plan it properly so that we will not exceed the budget that we have in our capital, right. And then sales forecast also need to be done, right, in order to make sure these um, sales forecast is exceeding, right. I mean the amount of this sales forecast is exceeding the budget that we need. If not, we going to make a loss, right. And then now let's break it down to the 5 steps in the financial plan, right. The first one, right, we need to look into the project implementation costs, and then we also need to look into the source of finance. What else? Our pro forma cash flow statement, pro forma income statement, and also pro forma balance sheet, right. Don't worry, we're going to look into this one by one. All right, now we look into depth, right, on the operational budget. As I mentioned just now, right, under this operational budget, we have several types of budget, which consist of administrative budget, marketing budget, and also operational budget. And then under this operational budget, we also need details that considering about monthly sales forecast, right. Now on the next slide, we look into these particulars or items that we need to record under this operational budget, right. As you can see here, on this table number 1, or the first table, right, we have office equipment, we have office renovation, we have rental, we have administration personnel, deposits, business registration and license, and last one is miscellaneous items, right. So you need to know where each of these items categorize, right. I mean you need to know which category of each of these items belongs to, right. So for office equipment and office renovation is falls under fixed assets because it is belongs to the company, right. So that is why it's will be recorded under fixed assets. And for rental, right, administration personnel, it is considered as working capital because this money you need to pay monthly, right, to the staff, right. And then to the building owner, for example, right. Rental. And then deposits, right, is deposits, business registration and license, and also miscellaneous is falls under other expenses. Same goes to these two table, right. It is quite similar, right? Just the particulars is a bit different, right. So under second table, we have office signboard. This falls under fixed asset. Marketing personnel is under working capital because this marketing staff, right, you need to pay their salary or wages, right. So that is why it is falls under working capital. Websites is also under working capital, right, because the websites, right, need to be update, right, monthly, and then of course you need to pay the website designer to update your website. So that is why it is falls under working capital. Then promotion is under working capital as well, and then the grand opening is falls under other expenses, right. Then for the third table, we have machine and equipment, falls under fixed asset. Operation personnel, of course, like I mentioned just now, or any staff or any salary that we need to pay to the staff that working with us, it is falls under working capital. And then raw materials is also falls under working capital. Utilities and maintenance is also falls under working capital. And then last one is insurance is falls under other expenses. Right now, we go into the next slide, right, which is project costing, right? It is a cost that required to start a business. It's required a short and also long-term expenses. And the amount of working capital depends mostly on the duration of time for a firm to generate adequate sales to cover its short-term expenditure, right? So these are the elements of project costing. We have capital expenditure, purchase of fixed asset, and also cash or hire purchase. We also have working capital, right? Operating capital to cover expenses. So whatever expenses that we need to pay in order to make the project the projects running, right, we need to pay these working capital. And we also have the pre-operation and other expenses, right, other costs required for business, and one-off costs or annual costs. And then last one, we need to have the contingency costs, right, funds to cover unexpected costs. So of course, right, any other any plans or any projects, there must be some risk, right, that might be happen when we are running a business, right? For example, like the bank do not want to continue their loan with us. So what else can we do? Right? Maybe we can try to cover the expenses that we need to pay by using the money that we have saved under this contingency cost. Same goes to like if let's say one day there's a natural disaster happen, for example like floods, right? Flash floods, for example, and then there's a lot of items or our assets getting damaged by this flood. So maybe we can use to the we can use this funds that we have allocate under this contingency cost to recover everything. For example, like buying new computers that have been damaged by the floods, right? Buying the photocopy machines, and also any other things that have been damaged by the cause of flash floods. Then this is the example of the project implementation costs, right? Under capital, we have 1, 2, 3, 4. We have 4 sub items under this project implementation cost. The first one is capital expenditure. We also have working capital. We also have pre-operations and other expenditure. And then last one is contingency. So contingencies over here, it says 10%, right? 10% here, meaning to say it is 10% of the overall cost that we have over here, right? From office equipment here until this pre-operation and other expenditure. So you try to calculate the total of this one, and then you times 10%, then you will get this amount, right? And then you need to total up everything, right, from all the costs that you need to pay plus the contingency cost that you have allocated, which is 10% of the total amount of all the costs or expenditure you need to bear in order for you to run your business, right? Then this need to be recorded, so everything everything that have been recorded, you can refer it from time to time, so that the plans that you have designed, right, is run accordingly. Right, the third one is the source of financing, right? So the financing can come from the external sources like loans and hire purchase, and also from the internal sources like cash or existing assets that we have in our company, right? So these are the elements of sources of financing. Like as I mentioned just now, we have external sources and also internal sources. So the external sources comes from the long-term and or short-term financing from the bank, right? From the financial, any other financial institutions. So also from the investors, right? And of course, when they lend the money or borrowed the money to us, of course we need to pay some amount of interest. So there you go, right? You need to pay the interest and whatever uh, uh, the time that have been given to you, right? Whenever the time has been given to you, right? And hire purchase, right, used to finance assets, not cash only asset but also the ownership financier until full settlement, right? Hire purchase, for example, like cars, all right, what else, land and buildings, any other vehicles that you purchase for you to run your business, okay? And then also from the internal sources, the cash that you have, right, the cash that you gathered from your own savings or the combination of your savings and also your business partner savings, and also the existing assets that you have in your company, right? So now we're going to see the examples of the schedules of payment, right? Loan payment. So as you can see over here, right, on this first table, right, the loan amount that you borrowed is 20,000 ringgit Malaysia, and the type of assets that you purchase is machine, right? And then loan period to fulfill all the settlement is 5 years, and then the interest rate that being charged to you is 5%. So this is the loan amount that have been borrowed to you by the bank, for example, right? They borrowed you 20k. Then this is the interest that you need to pay, right, monthly, right? Sebulan you kena bayar 1,000 untuk bunga lah, interest. Besar lah bunga. So that is why this financial plan is really important, so that you can plan properly of whether the machine or any other assets that you want to buy is relevant and beneficial to your business or not, right? And then this 4,000 is principal. Mun kita dalam bahasa Sarawak ataupun bahasa Melayunya adalah duit pokok lah. Pokok yang you perlu bayar, right? Pokok kan ada bunga juga. So interest is bunga. This is what we call as pokok lah, principal, right? And then this is the total amount that you need to pay, right? Principal plus interest, which is 5,000. And then this is the balance of the amount that you need to pay, right? If you look properly into this table, right, yang bahagian balance ni adalah adalah 20,000 ini tolak principal, tolak duit pokok sahaja, and then it will becomes 16k ataupun 16,000 ringgit Malaysia lah. 20k minus 4k, it will become 16k, but you need to pay 5k since you need to pay 1k ataupun 1,000 ringgit Malaysia as an interest. So you bayar 5,000 tapi the balance is akan ditolak daripada akaun you hanyalah 4,000 sahaja, right? Because this interest tidak akan dikira, right? Because it is considered as profit to the bank lah. Okay, same goes to this one. Okay, later on you can calculate lah, right? Memang sama aja, right? Yang akan this balance yang akan tolak principal, and then this will be the balance, the outstanding balance, right, the rest of the months, right? Sama juga macam saya mara tadi, right? The interest will not be included in this balance, right? Because this is considered as profits to the bank, right? Right, now we look into the example for the sources of finance. As I mentioned just now, right, in any business, we get the funds from the loan from the bank, right, which is loan, right, and also hire purchase, some of the hire purchase we get it from the bank itself, and from our own contributions, like if we have our own cash like savings, right, and also any existing assets, we also need to record it in these sources of finance table, right? So under this one, we have fixed asset, right? We have capital expenditure, we have working capital, right? One for 1 month, and also we have pre-operations and other expenditures, and last one is contingencies, right? Lebih kurang macam Tok buat tadi lah, like this one, right? Project implementation cost. But for this one, it has another column which is sources of finance. So mean to say, it will help you to identify where you get the money to pay for each of the items under these fixed assets, right? Now we look into these fixed assets one by one, right? Capital expenditure, we have office equipment, which is the money we get it from the bank loan. Office renovation is also from the loan. Then signboards, we are using our own cash money, so you need to categorize it under this own contribution, which is cash lah, right? And then machine and equipment is the fund is we get it from the bank, right? Bank loan, and also hire purchase. Hire purchase tu adalah dalam bahasa Melayu we call it as sewa beli lah, right? For example, like macam you beli kereta juga ataupun you beli your motorbike, right? Of course you need to pay monthly, right? Macam motorbike, the duration I think dalam 5 years lah paling lama. So once you have paid everything within this 5 years of period of time, right? 5 years duration, then everything has been settled, right? Including the interest that you need to pay, then these assets will belongs to you. So that is the meaning of hire purchase lah, right? And then working capital 1 month, right? Administrative 8,140 is under loan, right? Marketing is also under loan. Operation is also under loan. And then operations is some of the operations part you able to pay by using your own money, so you need to record it under cash lah. So let's say lah, if you have your own money ataupun cash money in your savings, you can use that to pay, right? But bear in mind, right, the business need to be a sole proprietorship, which is the business is solely belongs to you. You aja seorang. Baru you dapat make your own cash lah, right? If you have your business partners, make sure this 5,800 is divided ataupun paid equally lah. For example, you have one business partner, right? Mean to say there are two owners lah of the business. So 5,800 tu bagi dua. So ya ajak lah you need to pay. Then another half of it your business partner need to pay. Kena adil lah, right? And then the pre-operations and other expenditures being paid by loan. Then the contingencies, right, which is 10% of overall cost, right, which is 11,394 is paid by the loan, and also by cash, right, your own cash money, or the combination of your cash and also your business partner punya cash lah. Okay. Now looking into the number 4, which is pro forma cash flow statement, right? So this statement shows the cash inflows versus cash outflows, right? So the inflows, right? Now we look into the inflows, right? Which consists of capital, loans and sales. And for the outflows, right, it will consist of administrative expenses, marketing expenses, operational expenses. What else? We have a repayment, term loan and hire purchase fixed asset, and also pre-operational expenses, right? And then you need to bear in mind that if this cash inflows is exceed the cash outflows, right, mean to say you making profits, right? So let's say the cash inflows, all the items over here, and then when you total up ataupun sum it up, right, the amount, right, the total amount of this cash inflow is lesser than cash outflow, meaning to say your business is not in the healthy financial condition, meaning to say your business is not making any profits. So that is why this pro forma cash flow is really important, right? So this is what I talking about just now, right? When this cash inflow is exceeding the cash outflow, it will cause atau the result will be surplus. Surplus tu maksudnya ada duit lebihan. So duit lebihannya akan dikira sebagai profit lah, right? And then the cash outflow. So if the cash outflow is exceeding the cash inflow, it will lead to deficit. Deficit maksudnya negatif lah. The amount bila cash outflow tu melebihi, right? Melebihi cash inflow, yang akan lead to losses atau kerugian lah. Okay. Then this is the how the cash positions being calculated, right? Opening cash balance plus the cash surplus or minus the cash deficit. Right, ending cash balance for this month or year will become the beginning balance for the next month or year. So make sure that you have a very healthy financial condition for your business. So make sure, right, your inflow, the calculation of your cash inflow is exceeding the cash outflow. So it will lead to surplus, meaning to say you are making a very good profit for your business. Right, okay, this is the example of the pro forma cash flow tables, right? So there's a lot of items that you need to record it over here, but don't worry, right? I have shared the financial plan spreadsheet on eFuture. You can just use that, and then you just enter the figure of whatever you need, right, in order to run your business, and then it will help you to calculate everything, right? So please explore the financial financial plan spreadsheet, and then try to include whatever you need, and then type the figure for each of the items that you need into the spreadsheet. Then you will see, right, the spreadsheet will help you to calculate it automatically, right? Then this is the pro forma cash flow statement from year 1 until year 3, right, from the first year until the third year. So like I mentioned just now, you just try to explore the financial plan spreadsheet, trial and error. Then you can see, right, this spreadsheet or this financial plan spreadsheet will help you to calculate everything automatically. And then if you have any difficulties in running or using this financial plan spreadsheet, you just can simply text me, and then let me know what are the difficulties that you faced. Okay. And then here we calculate the profitability, right? So okay, so this pro forma income statement, right, is being used to show the expected profit or losses that you have faced, and then prepared after pro forma cash flow completed, and gross profit, margin after sales minus cost of goods sold. So meaning to say these are the formula that are usually being used in order for you to prepare your pro forma income statement. Right, as you can see here, net profit before tax, right, manufacturing and trading, deducting operating expenses from the gross profit. So you need to deduct all your operating expenses from your gross profit in order for you to calculate the net profit before tax. Same goes to the next one, right? Net profit before tax services, deducting the operating expenses directly from sales, right? Then differences due to the calculation of the cost of goods sales, the cost of goods manufactured, and cost of goods sold trading. And these are the things that you need to record, right? We have two items, or two different items over here, right? We have manufacturing and trading companies, and the next one is service companies. So if, let's say, you are doing the services that have this or this nature of business, right? Under this kind of nature of business, right? Manufacturing and trading companies. So these are the formula or the flow of calculations that you need to do, right? Sales, right, minus ataupun deduct cost of goods sold, then gross profits, you get gross profits, and then these gross profits you akan tolak lagi expenses, administrative, marketing costs, right, financial budget, and then depreciation charges. Depreciation tu maksudnya adalah susut nilai lah. Nilai susut nilai, macam you beli kereta, you beli mesin, of course nya akan adanya pun lifespan, right? Dan setiap tahun nilai ataupun value kereta ataupun any machineries that you purchase nya akan susut lah, right? You need to also calculate it, right? Then that at the end of it you will have the net profit of the business that you have done, right? From the business that you have done, right? This another one is for the service companies. This is more to services lah, right? Macam-macam lah service. For example, like macam Foodpanda pun service juga, because nya lebih kepada food service delivery, right? Apalagi maybe groceries pun delivery. So this is how the companies that categorize under services pun businesses going to calculate nya pun cash flow lah, right? First one is sales, kan after that dapat duit semua daripada sales ya, they need to deduct the expenses, kan perbelanjaan semua, and then cost administrative, bayar gaji, kena tolak cost marketing, cost yang promo, kan yang pakai influencer, kan they need to pay influencer, dan yang perlu tolak juga dekat situ. And then operational, right, all devices that they need to pay, right, apa lagi, water supply, electricity, semua kena tolak dekat situ. Then financial, depreciation charges as well, and then other expenses. Then at the end of it, they will get the amount of their net profit. So, the net profit before tax manufacturing higher than trading, because manufacturing has two types of closing stocks, which consists of closing stocks for raw materials and also closing stocks for finished goods. These are stocks already manufactured or purchased but have not been deducted from the sales. And then a trading entity only have one type of closing stock, right? For example, like closing stock of for finished goods, while a service entity normally does not have any closing stock. Right? Of course, these services pakai tenaga kerja aja. They doesn't have any physical stocks, right? Like raw materials and etc. So that is why the service ataupun a company that operating any services businesses doesn't have this closing stock to be recorded, right? And then all three types of business entities should have the same amount of the net profit before tax if there are no closing stocks. Okay, so these are the examples of the calculations. So, right, we have sales just now, right? Then this 240,000 is gain from the sales that have been done by the business, or from the business, and that need to be deducted from cost of goods sold, like for example here, right, 90k, and then you get the gross profit, which is 150,000 ringgit Malaysia, right? 240,000 tu tolak 90,000 akan dapat jumlah tu lah, 150k dari lah. And then this 150k need to be deducted, right, with these items under these expenses, right, which consists of administrative, marketing, financial, interest on term loan, interest on hire purchase, depreciation charges, pre-op expenditure, right? So they need to deduct everything. So when you plus these items over here, if you sum up all the items that you have over here, right, 96,000 sampai 2,200 tu, you sum it up, you will get this amount, right? 134,600, right? This 1,000 this 134,600, this 134,600, right, need to be deducted with this amount lah. So this 150,000 tolak 134,600, you will get 15,400 for your net profit. Okay, then for sales, this one is for the services pun business nature, right, ataupun company yang mula service pun business, right, business yang berkonsepkan service, right? So this is the amount of sales, 2,440,000 need to be deducted with the expenses that the company need to pay, right? Administrative, marketing, and also operational, right? Same goes to financial atau interest that they need to pay from the bankers, right? From the investor to the investors, right? And also depreciation charges also need to be paid. So this is the total amount of the cost ataupun expenses that need to be paid tadi. So sales tolak whatever expenses that need to be paid, akan dapat net profit, which is 9,400 ringgit Malaysia. And then this is the example for pro forma income statement from first year until third year. So you can see sales semua masuk dalam tu. And then all the expenses also need to be recorded in the income statement atau tables. Then need to be, sales need to be deducted with all the expenses that need to be paid in order for the company ataupun organisation to get to know how much profits ataupun losses that they have lah ataupun yang dapat lah. Okay. Then next one for pro forma balance sheets, right? Alright. So this finally, the balance sheet shows the financial position, right? So as you can see over here, right, elements of pro forma balance sheets, we have assets and liabilities. Assets adalah adalah harta-harta yang kita dapat, harta-harta yang kita ada, ataupun all the accumulations that we have is comes from your own fixed asset, current asset, and also other assets. Liabilities tu adalah tanggungan lah. Tanggungan you perlu bayar setiap bulan ataupun setiap tahun, right? Macam loan, right? And apa lagi? Electricity bills, water bills, right? You need to pay. So for these pro forma balance sheets, this is how we're going to calculate it, right? Assets equals to liabilities, tanggungan, tambah owner's equity, right? Plus owner's equity. Then these are the pro forma balance sheets. For example of pro forma balance sheets, as you can see, we have fixed asset. We also have current assets and also other assets, right? Then these all assets need to be sum up, right? Fixed asset, this total for fixed asset 59,156 tambah current assets, right? 123,514 ringgit Malaysia. So these plus these, right, you will get this amount lah. Okay, same goes to the other years. And then owner's equity, capital plus accumulated profits akan dapat this amount. And then long term liabilities, loan balance, berapa you balance loan ataupun pinjaman yang you kena bayar kepada pemiutang, for example like bank. And higher purchase balance is 16k. Then this is the amount for the long term liabilities. Then this amount the owner's equity pun amount plus long term liabilities pun amount, it will equal to 184,720 ringgit Malaysia. So you need to make sure this amount, total asset amounts, is equal to this amount. So if it is equal, so mean to say your calculation is correct, and then there is no error lah in your calculations, right? So in summary, right, the financial plan is an important part of the business plan, just like any other plans, like for example like administrative plan, marketing plan, and also operational plan. And then the financial plan consists of all financial information derived from the operating budgets. So to conclude, the financial plan is not about numbers only, but it is about telling the story of your business in financial terms, right? Investors, especially bank, want to see that your idea is not only creative but also profitable and sustainable, because they need to make sure you are capable to pay all the loans that you would like to apply with them, right? I think that's all from me for this the last chapter. Thank you so much for your attention, and see you guys next time.